Hey everyone, we have a very unusual market. Retail investors, as measured by the American Association of Individual Investors, report a high level of bearishness among individual investors, more or less retail investors. Meanwhile, the smart money, the institutional money, is bullish on the market, and that's what keeps driving it upwards. It is unusual for the market to be approaching new highs and for retail investors to be bearish. Now, technology is a mixed bag. I viewed when DeepSeek came out and burst the artificial intelligence bubble, I viewed that as the first shot over the bow of a possible crash occurring. And it's because valuations have gotten too high. The large cap technology stocks have not been too much out of bounds, but there have been some individual companies, and I will be going over these today, some of them as examples of how things have gotten too overvalued with some of these technology stocks, and many of them are stocks I've followed for months, and some cases years on this channel. Let's begin with Reddit and with Robinhood, which reported earnings recently on the same day. Reddit stock fell on Thursday after it reported earnings on Wednesday, and it was mainly because the number of daily users were not up to what analysts thought it should be. Analysts projected that they should have 103 million daily active users during the December quarter, and they had 101.7 million daily active users. So that was the biggest disappointment. Reddit's earnings of 36 cents per share fell below estimates that it would be 48 cents per share. But their daily active users in the December quarter, which hit 101.7 million, that's up 40% from 2023. But again, you can't be less than what they expect. They were expecting 103.8 million daily users, which is up, which was missed considerably in their view. Reddit's revenue rose more than 70% from the prior year to 427.7 million, surpassing analysts' forecast of 405.5 million. So their revenue coming in beat the analysts' estimates by a considerable amount. This is a good stock. It's just showing how you are punished for not meeting perfection, because this stock has been perfection, tripling since its IPO 11 months ago. That's unbelievable. But I think we're getting into this area with a lot of stocks where the price is just getting to be too high. Looking at the chart, you can see the tremendous growth of the last year, where it was below 50, and it's now 196. At one point, before this earnings, it was at 225, and so it's came down to 196. So there was a big reaction to it not meeting expectations. But even with not meeting expectations, it's made 317% in the last year. So wow. This is one for the future. It's the kind of stock that if it goes down a little bit more, a person could buy it if you're a long-term holder. I'm kind of expecting the stock market to take a definite direction at some point here, and I think that direction is more likely to be down, and I will be going into that. Just a friendly reminder that this is not financial advice because I do not know your personal situation. You need to do further research and gather further information to decide if the investments I present are right for you. I'm showing you this screen partially because this was taken the night the earnings came out, and it still shows faith in Reddit. The headline is Reddit the best young stock to buy and hold for 10 years. Okay. And, someone told me when Facebook came out years ago that this was something to buy and hold for 40 years. Okay. And I stupidly played the short game instead of the long game. And I did not benefit. So that's part of my affinity for Reddit. I think in a minor way, I don't think it will be another Facebook, but it's Facebook-like, it's Meta-like, and it could grow into something bigger than what it is. Another stock priced for perfection and taking over Wall Street is Hood, whose name is Robinhood. Robinhood and his merry men are taking over Wall Street because they've had outstanding results for the last year. And as you look at the 1 year chart, you can see that it's made over 387%. Wow. And it really shot up last Friday after earnings were after the market on Wednesday. It really took off, and it seems like it's priced for perfection, and there's an analyst that gave it a downgrade, not because there was anything bad. They beat on revenue, they beat on earnings, everything's wonderful, but it's just valuation that it's shot up too far too fast, and it's going to take some time to work it off. This chart compares Reddit to Robinhood to Hood, and you can see that Hood made 16% in the 5 days, and Reddit lost 12%, almost 13% in 5 days. But the big divergence was after they reported earnings. They just went totally different ways. And this is what happens when you meet perfection and when you don't meet perfection. And I think there's too many stocks that have been just wildly meeting perfection, and it's unlikely to continue. Another stock in the perfection category is Applovin, which I've covered extensively on this channel. I've always loved this stock, and it is wild. Its symbol is APP. It's went up 42% in the last month. It's gained over 45% since the start of the year. It has a record of positive earnings surprises. It hasn't missed earnings estimate in any of the last 4 quarters. At its last earnings report, February 12th, it reported earnings per share of $1.73. Analysts were estimating that it would be $1.34. It beat the revenue estimates by 8.62%. So it's been perfection defined. Looking at the 1 year chart, it's gone up from like 50 to over 500. So it's made almost 1,000%, 988% to be exact. It's now at 510. It went up from about less than 400 to 510. Wow. its relative strength is 81. It's safe to say it's overbought when it's breaking out in just a nutsoid fashion. Palantir is another stock, PLTR, that is just living out a dream. You know, when this stock went over $40, people were saying, oh, whoa, slow down, you know, and I thought it could go to 100. It's at 119 now. Of course, its relative strength is 78, so we'll consider it overbought. It's going to have years of 50% earnings growth to justify it. 30 or 40% earnings growth isn't going to cut it when you have this kind of increase in price. But in the stock market, many times the more something has gone up, the more it'll keep going up because it's just a thing that people are into it. And this stock has committed followers and is sort of like Apple that way. Not that it is like Apple. It's a data analytics company. It's heavily into artificial intelligence. But we can expect this stock to come down at some point when the general market goes down. And there will be reasons for that, which I will go into. In my quest to find an undervalued stock, I actually found one, and it was BYD. It's not Tesla. Tesla's been having a hard time lately. Their numbers aren't what they should be. Looking at the chart, comparing BYD to Tesla, BYD is selling more cars. Now, the BYD sales includes plug-in hybrids as well as all-electric cars. So it's a little bit unfair that way. But it's getting to the point where they're going to be beating Tesla in the all-electric cars too. BYD makes all manner of cars. They make hybrids, they make all-electric, they make internal combustion engine cars, they make electric buses. It's sort of China's General Motors and Tesla combined into one. And they have a battery that does not explode when it's pierced. And actually, it was rumored that Musk was thinking of using their battery if he was going to make a cheaper electric car, which I doubt is going to happen. You know, if they didn't have 100% tariffs on Chinese cars, we all would be driving Chinese cars, and we would be paying about $25,000 to $30,000 for a solid car that didn't give you too much problems. Looking at the chart, you can see it's gone up 91% in the last year, and its earnings growth rate is 20%, and its price to earnings is only 20. So this is a solid stock. It's the main Chinese stock that I would consider buying. And I am considering buying, but I'm waiting for the market to go down significantly, perhaps even crash. And I think it's due mainly to Trump's antics. No one knows how this tariff thing is going to work out. I think Wall Street seemingly isn't that concerned about it. And I think it's because it can be changed at the snap of a finger. If Trump decides to take it off, he can take it off as soon as he put it on. So he's kind of the czar of tariffs, which I think he enjoys. I can't day trade in this environment because the day trade, you need some level of predictability. You can't have complete unpredictability. You got to be able to see a trend going for at least a day, and we're going by the minute with Trump because the tariffs are on, they're off, they're taken back, they could be negotiated. Nobody knows really what's going on. He did announce that he was going to have tariffs on April 1st, but then he realized that was April Fool's Day, so he delayed it to April 2nd. This is the world we live in now. Another major factor is Ukraine and the war, and he thinks he is best friends with Putin on the one hand. On the other hand, Vance has said recently, maybe we would send American troops in to finish the job that Ukraine started if Russia doesn't want to accept some kind of peace deal. So there's these different views you're getting from this administration. And like I say, they could do anything on any front, and nobody knows what they will do, including their followers, including the MAGA people. I don't know whether they voted for this. I think what the net effect of Trump's tariffs will probably be is that it makes the economy worse and the stock market somewhat better. Perhaps. That's being optimistic. Now, it will make the economy worse because it might make inflation worse, but I think tariffs will make the economy worse. Things are more expensive. People can't afford it. There's some indication that consumer spending has gone down. So I think the economy is getting to the point of fragility, but if it's somewhat fragile and doesn't go into recession and it lowers interest rates, that'll be positive for the stock market. So it's walking a fine line, and nobody knows exactly how it will come out. It could possibly work, okay? And if it does that, I will be very happy. If they stop the Ukraine war, the market, I think, would go wild and would go wildly up, and I'm a buyer at that point. But we need to see a break in the result of what happens with tariffs, and we need to see what happens with Ukraine. Ukraine's probably going to keep going on, is the pessimistic view, but after 3 years of war, there's good reason to be pessimistic. So I think the tariffs are the big deal for the stock market. The stock market has learned not to believe anything on tariffs until it actually happens. So we don't know what actually happens until it actually happens. But I think it's going to break big one way or the other. I think it's most likely to go down. It could break up, in which case I'm a buyer. Thanks for listening.